I am here with one of the happiest men in America this morning.
That is
So
true.
tell us your great news. I mean, it's all over X, but maybe some of our viewers haven't don't go on X. So what's making you so happy this morning?
Well, let me weave a little story for you.
Ah,
And as you know, I come with slides.
yes, that's true.
So let me bring these up and then we'll tell
Okay,
the story.
all right.
So as many of your viewers know, I like to include images of the Cybertruck in our
Yes,
slides. And it's not because I just think the Cybertruck is cool, although it is. It's because for quite a while now, I've been planning to surprise my kids about getting a Cybertruck.
yeah,
Right. They knew we were getting one, but it was mentioned a long time ago. So they're young enough, they probably forgot. This image, by the way, I think from yesterday from the factory of a whole bunch of Cybertrucks waiting to be delivered.
right.
So that was the case with my truck a couple of weeks ago. So I think this Cybertruck here in the middle, the one that wasn't parked quite correctly, that's probably the one that came to me.
Oh, okay, all right.
No, actually, the truck I have is perfect. So here it is.
All right.
Mine looks a little different because you can get some crazy angles in taking images of the Cybertruck.
That is crazy. That's funny. I love it.
Yeah. So I plan to mess around with that a little bit and see what kind of crazy images I can get. Here's another one from the back. It's just an interesting shape.
Cern, I would have known that your garage was like, perfectly clean and it's just fits your entire look.
Absolutely. Absolutely, Randy. Yeah. A lot of people in my neighborhood, their garage is the exact opposite. They park their cars outside.
Right.
Yeah. That's okay too. It's a good storage space. Tail lights up close. It's
Uh-huh.
funny when you look at it from the back, it looks red. You put the camera up next to it and it glows a little orange.
Huh.
This kind of threw me for a loop because when I was looking at it, all I saw was red.
Huh.
So it's a
Yeah.
bit like gazing into the sun, I suppose. Something like that.
Something like that.
Yeah. And this was an interesting one from the front.
Hmm.
I don't exactly know how I ended up capturing this image, but when I looked at my phone last night, this is what I had.
There it was.
There it was. I don't know exactly how I got that, but the artistic side of me appreciates that.
Yeah.
And then, so this
Sorry,
is the moment.
did you say artistic or autistic? I missed that.
Both,
Both.
Art, I said artistic,
Okay.
but yeah, probably the other side too. So yesterday, we hatched this plan. So when my kids came home from school, my wife would park the car in the street, they would get out, and I would open the garage door. So this is the moment that they realized that there was a Cybertruck parked inside.
That's a pretty good moment.
Yeah.
That's a keeper.
So there's a video on X if folks want to see it. It's a short one. And my son exclaims, Cybertruck, and lets out a little squeal. By the way, he's going in for a haircut today, so his
I
hair
see.
is a little long.
You're explaining. You're explaining. You feel a need to explain, huh?
Yeah, there was a comment about that yesterday from somebody, but I am a little bit jealous of his hair.
Yeah, I'm sure. Yeah.
Yeah. So that was good. And then this was when my daughter, she asked me the question. She said, "Is this our Cybertruck or are we renting it?"
Yeah. Interesting.
So when I told her that it was ours, this was the look on her face.
Got it.
And by the way, she just lost her two front teeth. Turned out to be a very expensive tooth fairy visit.
Ah.
Because when my wife asked me for some cash to leave under the pillow for the tooth fairy, all I had was 20s in my wallet.
$20 bill. She got a $20 bill for one tooth.
Yeah.
Man,
So
I was born in the wrong century.
yeah, no, yeah. So kids are doing well these days with the tooth fairy.
Man,
Inflation is everywhere, Randy.
really?
Yeah. And then to round out things, our three dogs fit in the front.
All three?
all three.
Wow.
Now, you can imagine, in order to get this photo, that there were some serious amount of dog treats involved.
I didn't know it was dog treats, tranquilizers. I wasn't really sure what it would take. These are well-trained animals. Yeah.
No, not well trained, but
Not
when
well
it comes
trained.
to food, they'll do pretty much anything.
I see.
Yeah. But yeah, no, they look pretty comfortable in the frunk. So that was good.
Yeah, yes, indeed.
So more important matters. We've got a 1010 Robotaxi event coming up in just less than a month now.
Yes,
27 days, perhaps?
something like that.
Yeah. So this was an image that had been floating around for quite a long time. And you probably saw this morning this image.
I did. I even talked about it on the first show this morning.
Yeah, that's a different shape than we all expected.
Very different. Yeah.
But obviously it's well camouflaged. We hope. Perhaps not. Wouldn't that be funny if this was the exact
That
vehicle?
was the actual deal. Well, I got the impression that maybe, being on the back lot, maybe they wanted to, come up with kind of a toy, kind of a some wild and crazy looking vehicle.
Yeah. Well, it's interesting. I think the part in the back here, the squared off part, is a bit of a decoy, but maybe not.
Who knows?
Who knows? So yeah, it gives us all something to speculate about, but it could be almost any shape under there.
That's boy, I tell you.
Yep.
Can't tell you.
I can't either. I don't have any other. I'm stunned. I don't have any other thoughts.
There have been a few people that have taken some crayons and drawn on top of it, but I'm not, as you point out, I'm not sure you can really gather anything.
Right. I mean, the size, certainly you can see that it's smaller than I believe it's the Model Y behind.
Right.
But still, could almost be any shape. All right, let's transition with this cartoon. One chart fits all. And I suppose he's right if you turn that the right way.
Yeah.
All right, so let's talk about something I never talk about, which is the stock again. Lately, I've been on a Tesla stock kick. And so this is an analysis of stock returns for Tesla over different time periods.
Mm-hmm.
So let's start with short-term time periods. So these are rolling 1 month returns. If you bought the stock and held it only for a month, what were your returns? And so this is looking at basically every single trading day since the stock's IPO to the end of August.
Interesting.
Okay. So as you add 1 day on, you take 1 day off. So you get this rolling picture of returns. Right. And you can see that, you win some, you lose some.
Yeah, there was one really bad day.
Yes. And the worst, this is 1 month.
I'm sorry, one really bad month.
The worst month in history was a minus 57.7% return.
Wow.
Which is, as you can see right down here.
Yeah.
Okay. Now it's interesting because those are often surrounded by, a high.
Yes.
Preceding or high after, in this case, both.
Both. Yeah. This is that the beginning of COVID?
I believe it is.
Yeah.
Yeah. Yeah. So my quest here was to answer the question, how long would a Tesla investor have to own the stock for to be guaranteed, historically, of making money?
Okay.
Any guess, Randy, how long that time period would need to be?
Well, I think I might have seen something on X. So.
All right. So you can play dumb then.
Yeah, I'll play dumb. Yeah.
All right. Well, these are quarterly returns then. These are, 3-month returns.
Okay.
And you can see things are looking a little better.
Yeah.
But the worst quarterly return was minus 61%. So still pretty brutal.
That is.
Okay. And then we can advance this to 6 months.
Okay.
Okay. The worst 6-month period was minus 55%.
Still up there.
Still pretty bad. So I don't recommend buying Tesla and holding it for just 6 months. You could lose half your money.
Right.
How about 1 year? Starts to look a little better because the upside is so big.
Yeah.
But this negative number in the bottom here, the worst 1 year period was minus 72%.
Minus 72 in a year. Wow.
So that was pretty brutal. Okay.
Mm-hmm.
That's down to 2 years. What do you think the worst 2 year period return was?
Boy, I can't, you can't really tell much from your chart.
It's hard because the scale is smushed at the bottom.
Yeah.
Minus 57.9%.
Yeah.
Okay, and that's not annualized, by the way. That's just a absolute return,
Right.
down about 60% over 2 years.
And this is over any 2 year.
Any 2 year period.
Right.
Yeah. Now you can see that there's fewer and fewer negative periods.
Right.
Right. More is above that line.
Mm-hmm.
But still, the ones that are negative can be pretty rough.
Right. Now
let's go to 3 years.
The positives are pretty good too, though. 1900%.
Oh, the positives, yeah. The upside takes care of itself. It's the downside that you worry about. 3 years.
3 years.
The worst 3 year period. Hold on 1 second. Here we go. Is ending April 22nd, 2024, and it was down 42.7%.
So it pays to hold it longer.
Yeah.
Yeah.
And that was a period ending just not that long ago, back in April.
And you would have had in these times where you would have lost that much money, you'd have had to have been pretty unlucky.
Yes, correct. That's right, because almost all 3 year periods here were positive, except maybe a couple.
Right.
Yeah. 4 years. The worst 4 year period was ended on June 3rd, 2019, and it was down about 28%.
Okay. You could live with that.
Yeah. Yeah, that's not too bad, but still negative. 5 years. The worst 5 year period ended September 4th, 2019, and it was down about 23%. Okay. So the answer to our question is on the next chart, 6 years. All of the rolling 6 year periods for Tesla so far have been positive. Now, of course, anybody that bought the stock at the peak, that 6 years hasn't yet transpired yet.
Yeah. Yeah.
So these are just the 6 years that have actually clocked 6 years.
Right. Right.
As we advance this chart, we may see a dip at some point where that 6 year return is still negative.
So
that remains to be seen.
But we're a long way off from that. That was a November 22, right?
21, I think.
No, 22.
22? Okay.
I'm sorry. Maybe it was 21. I think you're right. November 21.
I think it's been 20. Yeah, it's one of those. If we go back, sorry, I'll go real quick here to the monthly chart. Yeah, it's hard to tell from here.
Yeah.
We can actually see that there'll be another chart in a minute. Maybe we can tell.
Okay.
Anyway, 6 years
is the answer.
Is the answer. Not a terribly long holding period for an investor.
Right.
That's to break even in the worst case. And you can see in the best case, the returns are phenomenal.
Right.
So yes, there's quite a bit of luck involved, I suppose, in terms of just if you just blindly invested in Tesla, you could have, you can just get your money back, or you can make a whole bunch of money historically.
Right.
And that's the nature of investing in the stock market.
Sure.
All right. Turns out that the bears are just Russian nesting dolls inside the bull. Mystery solved. I do like the expressions here of the
bears and the bulls.
Of the bear, yeah, it's quite good. All right. We've talked about before how I believe that NVIDIA and Tesla are riding the same AI wave. And NVIDIA is kind of in a sweeter spot right now of this AI wave, in that they are selling the equipment that Tesla and others are going to use to develop AI, products and services.
Right.
Okay. And we've talked a little bit before. Well, here's the image, by the way, of the two AI surfing buddies, as I call them. This was the day that NVIDIA delivered its first supercomputer to OpenAI.
Right.
And this guy keeps cropping up in these places. All right. Here's a chart of NVIDIA and Tesla's returns since Tesla's IPO. Right. And it is true, NVIDIA has outperformed. If you invested $100 in NVIDIA on June 29th, 2010, it would be worth $42,000.
Right.
And Tesla would be only worth $13,000.
Right.
Now, if you invest it in the S&P 500, it's like $700 and some dollars.
Right.
So these two investments have been phenomenal, and you can see at times the lines swap position. There are times when the blue line is ahead of the green line.
Right.
Blue being Tesla, green being NVIDIA.
Right. And pretty much until recently. So 2023, even in 2023, it was still positive Tesla.
It was. There was a period, I guess, back here in 2017 and 18, 19 that NVIDIA was slightly ahead. But yeah, they both have been extremely successful companies and on a similar pathway. And their futures are tied to the success of AI.
Sure.
Now, one of the topics that is important as an investor is to think about valuation of companies. And whenever you talk about valuation, the thing that always comes up is the PE ratio.
Right.
And the thing that I have always said is the PE ratio is actually pretty useless. And I'll show you why. This is Tesla's PE ratio for the last 12 months is the measurement here, LTM. So the stock today is trading at about 59 times the last 12-month earnings.
Okay.
Or the last 4 quarters, actually, to be more precise, because they don't report every month, they report quarterly.
Right.
So 59 times earnings. Is that good? Is that bad? Who knows, right?
Yeah.
You have to look at it relative to other companies. And certainly relative to Tesla's history, where it traded at 400 times trailing earnings, you could say, well, the stock looks pretty cheap.
Yeah. Yeah.
Okay. Here's the same chart for NVIDIA. NVIDIA is trading at 48 times the last 12 months earnings. Is that good? Is that bad? It's hard to say. It doesn't tell you anything about the future. Nothing about the PE ratio says anything about the future. And that's why the PE ratio is pretty useless. Now, to work around that, people try to say, well, okay, what's the PE ratio based on expectations for earnings?
Right.
Right. So here is the next 12 months PE for Tesla.
Okay.
And it's trading at 72, which is higher than the trailing 12 months. And you could say, well, that's pretty high. That's pretty rich. But in the past, Tesla's traded at over 200 times earnings, future expected earnings for the next 12 months.
Right.
And to compare that with NVIDIA at 30 times. So NVIDIA is cheaper than Tesla.
Right.
Right. So you could, if you were just looking at this, you could draw the conclusion that NVIDIA is a better deal than buying Tesla. And it may well be, or maybe not, but you can't, in my opinion, you can't just tell from looking at the PE ratio whether that's true or not. You really need to understand the business and what the future earnings potential is of these companies. And they may well both be very bright, but they're very different.
Right.
But what I want to show you is something that I call hindsight PE. This is for the true long-term investor. Okay. I'll walk you through this chart. There's kind of a lot going on here. If you bought the stock in 2022, okay, and let's say you knew what the earnings were going to be for 2023, the price at the end of 2022, based on the earnings that Tesla delivered in 2023, that PE would have been 30 times those earnings. Okay. If you knew for sure what 2023's earnings were and you were buying a stock on the last day of 2022, you would have paid 30 times earnings.
Got it.
Okay. 2021, you're buying the stock at the end of 2021 And the PE based on 2023's earnings, we're still talking about the same year's earnings, 2023 in blue, you paid 63 times earnings for that. 2020, at the end of 2020, you paid 55 times 2023 earnings. At the end of 2019, you paid 7 times. At the end of 2018, you paid 4 times earnings. Suddenly it looks like a pretty good deal.
Right.
My message with this is that if you have a long enough time horizon, you can find companies that are going to grow their earnings or potentially grow their earnings significantly, such that if you look at the PE 5 years out, you could be getting an amazing deal today. Wall Street is not capable of doing this. Wall Street might look a year or maybe 2 out. They are not capable of valuing companies 3, 4, and 5 years out. This is an opportunity for individual investors to do something different than Wall Street and get positioned ahead of what Wall Street may eventually do.
Arbitrage.
Time arbitrage in a sense.
Right.
Right? Wall Street operates on a calendar basis. They have to produce results to get their bonuses. Has to be in a calendar year. Individual investors have no such constraints. You can do your work on a company, understand the business, understand that there's growth waves potentially coming, position yourself ahead of that, right, and get a meaningfully better result. All right, let me just kind of show you behind the numbers a little bit, and then we'll talk about some of those other years. This is the market capitalization of Tesla at the end of each year. So in 2015, the stock was a $19 billion company, right? 2016, 44 billion. 2017, 58 billion. 2018, 53 billion. And then 2019 doubled, $104 billion. And then 2020 came and 800 billion. 2021, 943. 22, 456 billion, and now about 660 billion-ish. Okay, so you can see the growth of the market value of the company. Okay, now here's the company's earnings in the same time period. Those first few years were negative. So if you had done your homework and understood what the potential of Tesla could be, you could have positioned yourself in those early years when the company was losing money, right, and owned a company that was valued at, 18 billion or $40 billion. And then you get the benefit of that inflection point in the earnings growth. Right? And in 2023, about 15 billion in earnings. Now, I'm not suggesting this is easy, right? But as an alternative to trading the stock, if you understand a company deeply, you can position yourself in companies that have the potential to have this kind of earnings growth. This was not unknown to everybody. There were people that were saying this. There were people that had invested, right? So it is possible to do the homework and understand.
Right. And would another way to look at this, CERN, be to call it the options aspect of the company? So you have the kind of easier to project numbers, like, you're already making a Model 3, you sold this many last year, you're selling this many this year, so I can project fairly easily next year and the following year, but I haven't made any Optima robot yet. So it's much harder. So that becomes more of an options kind of play on Tesla.
Yeah, I think so. If you're looking this far out, you do have to heavily discount any assumptions you make about the future earnings power of the company. Right. But as we have talked about, the business model that is robotaxi and the business model that is humanoid robots puts the company on a totally different level. It's a totally different business model.
Right.
And so even if they're moderately successful in those businesses, the upside earnings power is enormous. Right. So as an investor, if you can get comfortable with that and get comfortable with the risk, and of course, there's no guarantee any of this happens. But if it does, the company has the potential for monster earnings growth, right? And we'll see that with NVIDIA in a minute, what happened to them. And this earnings growth, by the way, for Tesla was incredible.
Right. Already, yes.
Already. Yeah. from selling automobiles, which, by the way, is one of the most brutal businesses in the world.
Right.
Right. They picked a tough one to start with. Yeah. So here's just the PEs then based on 2023 net income. If you bought the stock at the end of 22, 21, 20, 19, and 18. So if you bought it in 2018, at the end of the year, you paid 4 times earnings based on 2023 net income. If you bought the stock based on 2022 net income, you could have got it for 4 or 5 times earnings, right? For that longer term investor. And then for 2021, 10 to 8 times earnings. Okay. So here's the numbers in a chart form. So the calendar years on the left, going from most recent down to the older, the market cap, the net income, and then what the PE ratio is 1 year before. So this 145 is the PE ratio based on the market cap 1 year before relative to the earnings in that year.
Yeah.
So the 74 is based on the market cap here, based on those earnings. Okay, so there were certainly some periods where you could have got a high growth company very, very cheaply. Okay. All right. Let's compare that to NVIDIA. NVIDIA is kind of a crazy story, right? The success of the company has been absolutely phenomenal. And, $14-15 billion company in 2015 to 1.6 trillion at the end of 2023. And now it's much higher than that.
Right.
Right. I haven't even factored in the success of the company this year.
Yes.
Right. Here is the earnings growth. Right. From, 600 million, 1.6 billion in 2015, 2016 to almost 30 billion last year. And this year it'll be off the charts again.
Right.
So the main message here is for investors that understand the growth potential of a company. If you get in early, you can essentially front run Wall Street, because Wall Street will never look at the earnings potential of a company. They're never going to sit here in 2019 and look at the earnings potential 3 or 4 years out.
Yeah.
They just don't, they're not focused on that. They never will be. Right. And as we mentioned on the previous show, Jensen was talking about the future of AI all the way through this period. Right. And of course, Elon's been talking about the future of Tesla for many, many years.
Right.
Many people, they decide that after a certain time has gone by, they get fed up with it. They get frustrated and they sell, thinking that things should happen quicker. Well, sometimes it takes a while. But for patient investors, you can really end up with a stock. Like you could have gotten NVIDIA at 3 times earnings if you bought it 5 years before the end of 2023.
Right.
Okay. Now, what does that mean for Tesla? So let me go back to this chart for Tesla here. If you bought the stock 5 years before this 2023 earnings, the PE ratio was 4, and you would have 12.4x your return.
Right.
Right. If you bought it 4 years before, you would have had a 6x return. Okay. And if you bought it here 1 year before, which is what Wall Street's going to focus on, you would have had a 1.5x return. So Wall Street would be happy with that. No one on Wall Street's going to get fired for having a 50% gain.
Right.
Right. But as an individual investor, if you could have looked further out, you would have massively beaten the folks on Wall Street. Again, I'm not suggesting this is easy. In hindsight, this is clear, obviously, right? So
Yeah,
this is tough.
Yeah.
Right. But
Yeah.
I'm trying to show that if you focus on the growth potential of a company and understand its business and get yourself positioned ahead of time, you can make outsized returns versus what the folks on Wall Street will be looking at. Yeah. And you're going to get a few wrong too. Like,
Of course.
this is like baseball. You're going to hit some and you're going to miss some. Yep. All right. Here's the table with both companies, Tesla versus NVIDIA, Tesla on the top, NVIDIA on the bottom. And I added a row for each one, which is based on sort of 2024. So this is Tesla's market cap 2024. I just took their last 2 quarters net income and just doubled it. So this number is pretty low for Tesla. right? And it makes these PEs look ridiculously high. The question is, when could Tesla hit the inflection point that we're seeing in NVIDIA? And again, my point is that Tesla and NVIDIA are riding the same AI wave. It is impossible for NVIDIA to be successful long-term if Tesla doesn't find success, in my opinion. Right? If AI works, NVIDIA is successful. If AI works, Tesla will be successful as well.
Right.
Now, that's barring any competitive pressures, right? Like there may be other companies, solve full self-driving too. Who they will be, who knows, because there's no one else doing the work. But just from a fundamental standpoint, if AI works, both of these companies should be hugely successful.
Yeah, and we've talked about a lot on this show is that robotaxi, well, energy storage, robotaxi, and especially Optimus, the size of the TAMs are almost unlimited. Elon has described the energy storage business as an unlimited TAM. It is not unlimited in comparison to robotaxi, and neither one of them are unlimited compared to Optimus. So as somebody who's started 40 plus companies, you don't commonly end up with an unlimited TAM. You might have what's called blue sky, meaning that you're so small compared to the overall market that you have a crazy amount of potential to grow. But in terms of the actual TAM, you're competing with other people in that space. And so you don't have the total addressable market is not this crazy number. But when it comes to the Optimus, talking in terms of billions of Optimi at even $20,000 or $30,000 a piece, the numbers are just crazy.
They are. And we'll leave it here for now. And just to tease our next show, we're going to talk about Elon good or Elon evil. But we're also going to talk about what you just said in terms of the impact on the economy from humanoid robots.
Oh, all right.
So
Cool.
done a little bit of further thinking with that as it relates to paying off our debt, government's debt.
Nice. Sounds like a great story.
Let's leave this here and we'll come back tomorrow. Is it Randy? Tomorrow?
Yeah, probably tomorrow, probably Saturday. Yes.
Okay. And we'll figure out whether Elon's good or Elon's evil. All
right. Maybe by the time we talk to you next week, you'll have had a chance to toot around in your Cybertruck a little bit and give us some updates on your experience.
Absolutely. And I am anxiously waiting to get FSD for the Cybertruck.
Yeah, that too.
And you can bet that I'll be trying that out extensively. So yes, I can't wait.
All right, Cern, thanks for part 1, and we'll be back shortly. Oh, well, in 24 hours for part 2. It's been great.
Thanks, Randy.
Talking to you. Oh my goodness. Here we go.